This is ShadowQuant, Stocks, brought to you by AresLabs.ai. Before we begin, please note, what you are about to hear is an AI agent panel. All analysis, voices, and production are generated by artificial intelligence. Nothing you hear constitutes financial advice. Always do your own research. Today is Monday, July 27, 2026, and this is the After Hours session. Now, let's get into it. The market is sending a very specific message today. It is dumping technology, but it is not panicking about the economy. The S&P 500, tracked by SPY, is essentially flat at $738, yet the Nasdaq QQQ has shed more than 1%, led by a brutal sell-off in the technology sector. Meanwhile, the financial sector, is rallying, and the VIX just ticked higher, suggesting that while the index looks calm, the internal structure is shifting toward defense. Is this a healthy rotation, or a warning sign that the AI narrative is hitting a wall? We are breaking down the data. Before we dive into the charts, let's look at the calendar. We are on Monday, July the 27th, 2026. The market is digesting the weekend, but the week ahead is packed with data that will test this new risk-on regime.
The key for me is the GDP print on the 30th. If GDP is soft, the rotation into financials and energy isn't about growth, it's about hedging against recession. We need to see if that data holds up.
Let's look at the numbers. The S&P 500, SPY, is trading at $738.93, up a fraction of a percent. It is holding near the top of its recent range, which had a high of $755 and a low of $735 over the last 10 days. Let's talk about the headlines moving the needle.
On the macro side, the 10-year Treasury yield is at 4.69% and the 2-year is at 4.33%. The curve is positive but narrow at plus 36 basis points. This flat curve supports financials, but it pressures high-duration tech stocks like those in the Nasdaq.
Let's start with the biggest story in the index, the rotation. We have the S&P 500, SPY, holding steady at $738, but the heavyweights are shedding weight. Let's look at the technology sector, and the financial sector together. This is the great rotation we've been hearing about.
It's ugly. The technology sector is testing the lower end of its recent range. Looking at the daily history, the high back on the 22nd was $750, and it has been selling off since. The immediate support we need to watch is the low from last Friday, July the 24th, which closed at $738. If that breaks, we are looking at the gap down from mid-July, around $730. Volume is expanding on the downside, which confirms this isn't a shallow pullback. The trend structure on the hourly chart is making lower lows. It's a breakdown.
And the fundamentals are supporting the technical breakdown. You're looking at the earnings data. Nvidia had that massive 121% earnings per share growth, but the market has already priced in years of that. Now we are seeing a sell the news dynamic. Meanwhile, Apple, which has had 13 quarters of growth, is showing signs of fatigue. The institutional flows are rotating out of high beta tech and into value. We see capital moving into the financial sector. Why? Because with the 10-year yield at 4.69%, banks can maintain net interest margins. The CFTC data shows commercials are bullish on the S&P 500 E-mini, but they are also bullish on the dollar. A stronger dollar and higher rates favor banks over unprofitable tech growth stories.
I agree with CIPHER on the flow, but let me stress test the bullish case on financials. Grid, you said the technology sector is breaking down, but look at the VIX. Yesterday, the VIX closed at 18.58. It's rising. When the VIX rises in a low volatility environment, it usually means the risk-on trade is unwinding. The risk here is that financials are not a safe haven. They are cyclical. If the Dallas Fed manufacturing survey on Thursday comes in weak, or if durable goods orders on Thursday show a contraction, the financial sector will fall just as hard as the technology sector. We are not in a recession yet, but the spread between the 2-year and 10-year is only 36 basis points. That is a very flat curve. If that inverts, the financial sector gets crushed. I'm not saying it will, but the risk-reward is not favorable for chasing financial at $7.50.
I'd add that the sentiment data supports the rotation, but it's not a bullish rotation. The fear and greed index is at 37. That is fear. Investors are moving to financials and utilities. The utilities sector is up today, not because they love banks, but because they are afraid of tech. The put/call ratio for SPY is high. People are buying protection. This is defensive positioning. It's not a buy signal, it's a hide signal. So we have a technical breakdown in tech, fundamental support in financials, but rising volatility and fear. Let's move to the benchmark. SPY is at $738. It's holding. Why is the S&P 500 resilient when its biggest component, tech, is getting slaughtered?
SPY is holding because the other sectors are compensating. Look at the IWM, the Russell 2000. It's down only 0.3%. Small caps are holding up better than large cap growth. The support for SPY is the high from July the 24th, $743. It hasn't tested that yet, but the real support is the average of the last 5 closes, which is hovering around 740. SPY is essentially in a consolidation channel between 735 and 750. It's not breaking out, but it's not breaking down either. It's waiting for the earnings data from Thursday.
And remember, SPY is weighted heavily by the Magnificent Seven. NVDA, MSFT, Amazon. NVDA is up 121% earnings per share. Amazon is up 65% earnings per share. Even if they are down today, their earnings power is immense. The valuation compression is what's hurting. We are seeing a derating. The price to earnings on the Nasdaq is getting stretched because rates are at 3.63%. But the price to earnings on financials is cheap. That's why SPY is flat. It's a tug-of-war between cheap financials and expensive tech. The net result is zero.
The danger here is breadth. The news says 5,243 stocks advanced versus 4,423 declined. That looks good. But look at the new 52-week highs and lows. There were 402 new highs and 439 new lows. More stocks are hitting new lows than highs. This is a weak advance. If SPY breaks below 735, the technicals suggest a move to 720. The VIX, which was at 18.58 yesterday, is a lagging indicator. It's already repricing risk. If we see a spike in VIX above 20, this resilient SPY could turn quickly.
Let's talk about a specific name that is moving against the tide. Raijdi Computing, RGTI. It's up 5% in pre-market due to the HPE collaboration. How do we view this news-driven move in a sector that is getting hammered?
Technically, RGTI is a micro-cap. It's trading at $14.89. The chart is noisy, but the gap up is a sign of institutional interest. If it holds above $14, the next resistance is the pre-highs from last month, around $16. But in a sector that is down 1.44% like the technology sector, this is an outlier. It's not a sector play, it's a stock-specific play.
From a fundamentals view, this is pure speculation. Raijdi is not profitable. The valuation is driven by the narrative of quantum computing. The COT data doesn't show significant positioning here because it's not a major COT report. This is retail and hedge fund momentum. The risk is that when the broader tech sector, QQQ, continues to sell off, even news-driven stocks like RGTI will get dragged down by beta. The put/call ratio for small caps is high. People are betting against this rally.
Exactly. This is the pump and dump risk. RGTI is up 5% on news, but look at the broader context. The VIX is rising. Credit spreads are widening. When risk sentiment turns, speculative names like Raijdi get hit 10% or 20% in a day. The news is real. The HPE collaboration is good, but the price action is overextended. I would avoid chasing this. The risk of a mean reversion is high.
Finally, let's look at the quantum computing niche as a whole. We have RGTI, but we also have IonQ, which is up nearly 5% in pre-market. And we have D-Wave, DWAC, mentioned in the hot list. Is this a sector rotation into quantum, or just a few stocks catching a bid? Sentiment on quantum computing is high. The news sentiment for NVDA is bullish, and RGTI and IonQ are riding that coattail. But the fear and greed index is at 37.
This suggests that while there is excitement, the overall market is cautious. This is a pocket of optimism in a sea of fear. It's not a broad-based rotation.
Look at the earnings. NVDA is the leader. It has 121% earnings per share growth. RGTI and IONC have no earnings. The flow is chasing the certainty of NVDA, but NVDA is too big to move 5% easily. So money is flowing into the smaller players like RGTI for higher beta. But this is fragile. If NVDA pulls back, these names will collapse.
And let's not forget the risk. The VIX is rising. The 10-year yield is 4.69%. High rates kill speculative valuation. These quantum stocks are long-duration assets. They are worth nothing today and everything tomorrow. If rates stay at 3.63% or go higher, their present value drops. I see a massive downside risk here if the macro data on Thursday comes in hot.
Apex tie it all together. We have a flat S&P, a weak Nasdaq, a strong financials sector, and a rising VIX. What is the equity outlook?
The data is showing a clear divergence. Grid technical breakdown in the technology sector and CIPHER fundamental shift into financials confirm that capital is moving from growth to value. This is a defensive rotation, not a bull market continuation. Pulse sentiment data at 37 and SPECTER VIX warning indicate that this is not a time for aggression. The S&P 500 is holding, but only because the weight of financials and energy is offsetting the drag of tech. The key is the GDP data on July 30th. If GDP is strong, financials may rally further. If it's weak, the whole system could correct. My view, stay neutral. Reduce exposure to high beta tech like the technology sector and RGTI. Increase exposure to financials but be wary of the flat yield curve. This is a wait-and-see market.
To recap, the S&P 500 is flat at $738, but the internal structure is shifting. Technology is breaking down, financials are rallying, and volatility is rising. The upcoming Dallas Fed survey and durable goods orders on Thursday and the GDP report on Friday will be the make-or break events. Let's hear your weekly calls for Friday, July 31st.
The Fear and Greed Index is at 37, and credit spreads are tight. I expect sentiment to remain cautious. My weekly call, SPY neutral, target 735 to 745 by Friday.
The technical structure on the technology sector is broken and SPY is consolidating. I see a range-bound market. My weekly call, SPY neutral, target 738 by Friday.
Earnings are strong for NVDA and Amazon, but valuations are stretched. I expect a grind higher in financials. My weekly call, the financial sector bullish, target 57.5 by Friday.
The VIX is rising and the yield curve is flat. I expect volatility to spike. My weekly call, VIX bullish, target 21 by Friday.
Given the divergence between tech and financials, I expect a choppy close. My weekly call, SPY neutral, target 740 by Friday.
So, a consensus of neutrality for the S&P, with a bullish tilt for financials and a bullish skew for volatility. Interesting mix. If you're finding value in this analysis, support the project at patreon.com/ShadowQuant. Patrons get early access to every episode, weekly AI analyst scorecards, and daily intelligence briefs. And if you're listening on Spotify, Apple Podcasts, or YouTube, hit that follow button and leave a rating. It helps more traders discover the show. We appreciate you. This content is generated by artificial intelligence and is for informational and entertainment purposes only. It does not constitute financial advice. Equity markets involve risk, and past performance does not guarantee future results. Always do your own research before making any investment decisions. That wraps up this edition of ShadowQuant Equities. Stay tuned for the Tokyo session where we will see how these calls play out. Until then, trade safe.